The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. I'm going to start out Tiger TV today with a chart from the 1987 stock market. Larry Fink from Blackstone was on the tube yesterday on Bloomberg, and he was saying that the euro was going to go to zero within the next 10 years. Well, if he can say the euro is going to go to zero, I could at least say that we might be looking at a correction in the stock market. It might not be a crash, but then again, it possibly could be. What I've done so far today is to put in the chart from 1987. It goes back starting in July of 1986, and it takes you through the October crash of 1987, and then it stops at that point because I just wanted to highlight what happened during that time. Folks, that was the most scariest time that I've ever been in this business, because there was no trade being transacted on that day. There was just nothing but offers all the way. There were a few brave souls that stepped in and took a look at it, but it didn't last very long. And even if you tried to put a stop in, the stop was so far away from the move that it was just incredible. Just to give you an example, the S&P was trading at around 260, and that's when the contract was $500 per point, 1/10 of what it is now. We didn't have the E-minis. And the handle on the buy and sell was, the buy was at 240, the offer was at 280. So it was 20 points under on the buy and 20 points over on the sell when the market was trading at 260. Now, folks, at that time, that was 20 points on a stock that had a $500 per point. That means it was a 20,000 bid and ask difference between those particular things. Someone asked a question about Sam Crawford making a prediction this month. I'm really not sure what that is, so I can't really comment on it. I know that he was looking for some real serious sunspots to come out, but NASA said that the storm was not nearly as bad as they originally anticipated, so I don't really know. I know that Sam is very his name is Samuel Archibald Arrington Hicks Crawford, and all of his friends call him Sam. But Arch has a real strong date coming up around the 23rd of November, much like what we're looking at here. Now the market goes down and then it comes right back up. That means that it probably has not made a top in here, but this is how these tops are made, folks. What I want you to remember here is I don't know how it's going to unfold, if in fact it's going to unfold, but all the factors are there. The margin debt, the number of bullish consensus, all these things I brought about on this program before over the past few weeks, and I don't think it's necessary to bring them up again, but it's just we've only seen this 5 times in the last 40 years, going back to 1974. And each time it was a major top where the market corrected better than 50%. Well, we're going to see what happens this time, but this is a very interesting time because we have the Federal Reserve in there playing games, and whether they've played the right game or not remains to be seen. That might be the thing that causes everything to have a little bit of a problem. What if the Fed can't unwind some of this stuff? There's a lot of reasoning about, what do they do with the money that they have. So that's what we're really look for. The thing that I want you to remember here about this chart from 1987 is that the market topped on August the 25th, 1987, with a 5-planet conjunction. In other words, 5 planets were at 0 degrees: Mercury, Mars, Venus, Jupiter, and Saturn. And there was also I believe it was a new moon, I believe. And so we had all of these things happening on that day. It was known as harmonic convergence. That's what the people that believe in the metaphysical stuff of astrology, they were thinking that it could be the potential for the end of the world. All I was saying is that there's going to be a pretty big turn in the stock market. I was on TFNN, FNN, the Financial News Network, in Los Angeles with Bill Griffith and Ron Insana, and oh gosh, I can't remember her name. I'll remember it in just a second. My gosh, I know her like I know the back of my hand. But anyway, I was a guest, and I was on there, a guest every 3 weeks, and I had told Bill Griffith that sometime during the month of October that we would be looking at the one of the biggest down days that the stock market had ever had. And all I did was I went back and looked at what it had done during the correction in April, and I multiplied that by 1.618, and that came out to 500 points. Well, the Dow dropped, it came out to 300 points, and the Dow dropped 500 points that day, which was in fact a 16% move. If we equate that to what is happening now, that would be 2,500 points in the Dow in one day. I know we can't believe anything like that could happen, but we live in interesting times, and we have all these, weapons of mass destruction out there for trading. So if we can't find counterparty risk on some of those things, we will see. The name of the lady was Sue Herrera. And Sue actually, well, it was a long story, but she had been dating the guy who started FNN in Los Angeles, and then they sold it to CBS, which became CNBC, sometime, I believe, around 91 or 92. I'm not sure exactly when that was. But then they all moved to New York. But the key to watch for, folks, is that the market is just not going to come down and just start a major top and fall straight down. It's going to have one really good counter trend rally even after we get a huge break. So after we get the huge break, then that's the one you want to be looking at to see where you want to be a seller at. And it's not going to be easy because you're going to have a lot of conviction. You're going to have to believe it, if you believe it. If you don't want to believe it, that's up to you too. But if that happens, we'll see if this is going to occur. Fortunately, I'm on 3 days a week here, that we will see that whether this occurs during one of the times that we're on, but we'll wait and see what was happening. We're looking at it. The market has actually gone nowhere. The last time we talked about the lunar things, the S&P was at 1763, and right now it's trading at the same price, 1763. The big cycle that I've been waiting for, there's two of them. One is on the 15th, okay, and then there's another one that will occur on the 23rd, and that's the big one. That happens to be a Saturday, so that's going to be an interesting one, to see what happens, during that time. Now, we all know that the margin debt is at an all-time record. It's equal what we had during 1929, and there's one other thing I wanted to bring about that we already know, and that is that people that are in the interest rate markets are buying junk bonds more than they are the 30-year bonds and the notes, and that's because the junk bonds yield a lot more. Well, they're called junk bonds because that's what they usually are, is junk. I mean, they don't go bankrupt or anymore or anything like that, but they're called junk bonds for a reason. They don't have the same rating that they have with the 10-year notes and the 30-year bonds. So people they're exposing themselves to a great deal of risk at a time when the market is extremely overbought. It's been going up for just about forever, but we've had good corrections along the way. We had tremendous buy signals back last Thanksgiving. If you'll remember, we had a huge Bradley turn date last Thanksgiving, and the market took off from there. And then we had another one the day after Christmas that really skyrocketed the market, and then we had the January effect that took the market higher. So we've been going up consistently for the whole year. It's been a very interesting time to be in these markets, but this is how a market will usually end. If that's going to be the case, we don't know. All we do is we look at the patterns and we try to find the ones that seem to be the easiest to find and the best to possibly look at. Now, I wanted to switch gears here for just a minute. I'm going to cover gold in just a little bit here because gold is knocking on death's door, folks. But we're going to go over to Japan right now and take a look at the U.S. dollar versus the Japanese yen, because we're completing a very bearish Gartley up in this area here, and that's telling us that the Nikkei Dow is getting ready to turn down, because the correlation on this particular one, if this Gartley is correct, is that the market in the Nikkei will be ready to turn down relatively shortly, within a day or two, and this market will start to move to the downside a little bit more, which would also add some more pressure on our market, because we have these huge swings in the stock market now, which you're supposed to have these. This is why we have the same type of patterns occurring in the stock market that we have in all the other markets, because they're doing the exact same thing. I wanted to show you today. We've had a very really strong rally today coming in the S&Ps, and we always watch these ABCD patterns form, and I wanted to put one in here to show you what was happening today when we were making new lows on the S&P, because we were making a beautiful 3 drive to a bottom pattern, and it was coming in right at a 382 retracement of the last low that we had made way back on October the 9th, and that was the day before we had the large number of aspects days, and then we had the 300-point move in the stock market following those large number of aspects. Now remember, we have the same thing occurring on November 22nd, 23rd, 24th, 25th, because that's the same type of pattern with the aspects during that time, and unfortunately the 23rd falls exactly on the Saturday, so it's either going to happen on the 26th or Monday the 25th would be my best guess, that these aspects, if they hit, are going to make the market have a pretty big move. So we'll see if this is going to be something that's going to continue calling where a market might turn, or whether this is going to be one of those times where it just doesn't work at all and goes pretty much crazy. I noticed this morning when I went out to look at the sky like I do every morning, just to make sure it's there, is that we have a beautiful full moon coming up pretty soon. I imagine it's going to be in about 4 or 5 more days, and so that'll be an interesting thing to look at, because it might come in over the weekend. That's my guess, because we had the last one, I think, on the 4th. Yeah, it should come in on the 14th. Should be around the 19th. Is when next Tuesday is when we should have the next new moon, 17th. Someone corrected me on that. Thank you very much. We have a lot of astrologers in the room, which is good. So that's what we're watching in the stock market right now. We've had a really good move off the bottom. We're back to unchanged. Dow's down about 30. The S&P is down a bit. I'm going to take a break. 877-927-6648.
It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to switch gears now and talk about the gold market because, we know how close Tom is to the gold market. We have a situation where we've broken down below the 786 of the weekly low that we had way back in October, and that sets up a price target of 1184 based on the ABCD pattern, that's going on in the gold market right now. Gold is acting much, much better than silver is at the current time, so I think that by taking a look at the silver market along with the gold market at the same time, we'll be able to see that how weak silver really is, because it is already, approaching those lows from way back in October, and it's making new lows today, whereas gold is not making new lows. So this could be a divergence in the silver market that could lead to a very low risk buying opportunity, maybe around the 50 cent level, but 20.50 level. But frankly, I think it's safer to wait and see. We're seeing a lot of selling across the commodity markets, as you know. Corn and wheat have been down for a long time. Soybeans have had a little bit of a rally. Sugar has been down. We've had a rally in orange juice, but that really doesn't count because there's, they have ranches in Brazil that are bigger than the state of Florida, so that really doesn't affect much anymore. But, rubber is down. I mean, everything is just getting hit really bad. Copper, just got massacred on the downside today. And, so it's down about 7 cents in copper today, too. We'll cover a lot of this tomorrow when we do the commodities report, because there's so many of these commodities that are really hitting bottom that or making bottoms that you really have to pay close attention to it. And one particular one is, of course, the crude oil market and its derivatives, heating oil and gasoline, because heating oil and gasoline have already turned the corner to the upside and have had very substantial rallies, whereas crude oil continues to make new lows. So it's an interesting phenomenon that we have going on, in the markets with commodities. The point that I want to bring out to you is, if you remember in 2007, it was the commodity markets that also started to turn down during and before the financial crisis, telling us that there was something out there that people were not sensing or seeing or being aware of. And I can remember Bernanke's comments at the top of the market in October of 2007. He said that he could see no problem with the real estate market at all, that it seemed fully capable of handling the business that was there, and there didn't seem to be any problems. And then after that, you know what's happened. But that was the credit default swaps and all the CDOs and other things that they had, that, the weapons of mass destruction. Folks, these banks are still doing the same kind of things they were doing back then. They just do it with impunity now because they know they can't fail, because if they get into trouble, the government's going to bail them out. So it's a situation that we've not seen before. And when you add to that the fact that the Federal Reserve is pumping money continually into the market, trying to get asset prices high, then that tells you that there is something, really a little bit different in this one. And maybe it's different this time because something might be actually a whole lot different. And as one of the Fed presidents from Philadelphia said, Mr. Plosser, he said the thing that he worries about most in all of the financial markets is the counterparty risk. In other words, who's on the other side of these trades, and will they make good for it? And that's what happened, to the wrong side during the 2008 debacle, because AIG had put out all of these contracts, and they were not able to fulfill them, and so the government had to come in and give them, $40 billion, and they did come out of it okay, which is a wonderful thing, but, not all the time will that particularly happen. So you've got to be able to, keep an eye on these things. All I'm saying, folks, is that I know we live in Camelot, but there are a lot of things beating on the door from the technical perspective that tell us that we should have some really good common sense here on whether we're going to go up forever or someday we'll have a turn down in the market. This is what we'll have to find out. So we'll see if that's going to be the case or not. We've got the Dow Jones is still up on the day, or still down on the day, 14 points. It's come back quite a bit. The New York Composite has rallied back. S&P futures are now up on the day, and even the NASDAQ is rallied to be up 12 on the day. So it's been a pretty big turnaround. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, I'm going to post into Tiger TV the New York Stock Exchange Index. It's not traded on any exchange, but it's traded as I think the basis for most ETFs. I just wanted you to see that since October the 29th, the market has been in a downtrend. We've had lower tops. We're having the same thing happening today. Based on where this would be right now, if this were the S&P 500, it would be trading up about 10%, up around the 1,096 level, and 10,096 level. And as you can see, we're at 10,100. The reason why is the futures markets, are traded through exchanges, and people are in there with lots of margin, and it's a trading vehicle, both with the Dow Jones E-mini, the NASDAQ, and also the S&P. So they have a tendency to move, very dramatically. But this is the real market, folks. You cannot deny this, because this is over 6,500 stocks of the largest stocks in the world, the highest capitalized stocks in the world. And these are the ones that this is what the real market is doing. So you have to remember that we are making lower highs since October. And I know we can make a new high in the S&P 500 and the NASDAQ and the Dow Jones, and we probably will. But that doesn't mean that the market is going higher, because the broad market, that NYSE, is not doing that. Now, if it happens to do that, then then the market is incredibly strong, and we'll see. But the breadth of the market has been very poor. We've had days, today we were more decliners than advancers until just a little while ago. And so the market is, having a really strong rally, much like we did last Friday. Whether it's going to continue the same way or not, we'll have to wait and see. Now, if we take a look at the same index, this New York Stock Exchange Index, and look at it, you'll notice that if we go back for the last 6 years, we can see the high that was made, back in 2007 with the big ABCD pattern. The market broke and then made a Gartley pattern, and then from that level, the market started to come down. I've marked the chart with a little yellow box, because that yellow box was the time when we were trying to save Lehman Brothers. I know Goldman Sachs was not trying to save Lehman Brothers, but the rest of the financial community was trying to, put a price on it so it would be able to save Lehman Brothers, but in fact it didn't. And then after that, the market came down, and if you remember, we had the TARP, the Toxic Asset Relief Program by Hank Paulson, and that was supposed to, bail us out. That was in September, but the market did not bottom until March, on March the 9th. And since that time, we've been in a massive bull market, one of the biggest ever. And now what we're having is three drive to a top pattern, three different ones coming together at the same time. When we have a record margin debt, and there's just so many things that are very scary here. That I hope I'm wrong, folks, but if I'm right, you're going to see one of these days it's going to come in and the Dow's going to be down 300 or 400 points, and no one's going to know why, and they'll view that as a buying opportunity, and it probably will be for a few days, but that will be the trigger mechanism to tell us that that's where we are. The trigger mechanism for me, as I've mentioned many times, is if you use the S&P futures, and if you use 1733, that's December futures at 1733. We are 34 points above that right now at 1767, so it's quite a ways. Earlier in the morning, we were only 20 points away, but the market's had a pretty good rally here. But that's what we're watching, is to watch that, because we do that, we break it out the last week's lows, and that everybody's bought over the last 3 weeks is going to be underwater. And that's what happened with Apple when it was up around the $700 level, and that's what makes these charts so very, very important to look at. I wanted to bring the price of Amazon up again, because we are at a really critical level in Amazon. I believe it's getting ready to make one of the most bearish patterns that you could possibly get. And we've had a tremendous move in this stock, and by golly, anybody that doesn't buy anything from Amazon, they're not on this planet, because they're incredible at what they can do. But we've had this huge island that we've left here since the middle of October, and everybody bought into that gap has been underwater now. There were only 4 days where the market stayed in the same range during early November, and then the market has broken down. And if some reason that Amazon would break down and go below 341 and leave a gap there, you would have an island reversal, and that is one of the most bearish patterns that you could possibly have on a stock. We had one of those very similar to that with Apple when it was at $700 a share. We gapped down one afternoon trading, and that was it. It never looked back. It went from 703 down to 385. And anyway, just be careful of this. It might go up forever, which some stocks do, but we'll watch that to see if it's going to have that occur to it. Now, I wanted to talk about one other thing that I really enjoy watching, and that is the Tesla automobile. And it's been a really big stock. It's gone from almost nothing up to 196. And since that time, we've had a pretty good correction. The only reason I'm putting this chart in here today to show you is the fact that it has so many patterns that were indicative to pattern recognition that were telling us that there was something, getting ready to happen in Tesla because of the three drive patterns that were occurring, and the fact that each high was exactly equal to the next high. In other words, from high to high was 22 days. High to high was 22 days, and high to high was 22 days. So After that occurred, you can see the market started to make ABCD patterns to the downside, and it culminated in the price objective we were looking at, which was around 136. The low was 135 and change. And so, Tesla has made some type of a major bottom in here. Folks, these patterns don't work all the time. We know that. Nothing works all the time. But when you see so many of them across the board in stocks and futures and all the things, there are little red flags everywhere across the financial environment that I see it. And the bad part is we're the people that see it because we're technicians. We don't listen to the news of what the politicians are going to do or who's going to fund what or what the Fed's going to do. We're just looking at the sum total of all the buyers and the sellers. And folks, it doesn't look very good. That's the bottom line of what we're watching here. It just looks anemic at best. That's the bottom line of what you're really looking at here. I wanted to switch over here to the bond market because we have a situation here where the bonds must hold this level that we hit yesterday. I will blow this up because we made a really nice Gartley pattern in the bonds down at this 131 level, and they must hold this level or we are looking at some really serious things happening. But they hit the exact 61% retracement yesterday at the 131 level, and that means they could easily rally, up to the 133 or possibly even 134 level. Interest rates have been coming down or have been going up for quite a while now. So maybe we'll get a little bit of a breather here to see if we'll be able to make a move to the upside in bonds, i.e. lower interest rates. But I've said all along that the long-term chart in the bonds, I'm going to put that up here. You're going to see it here, how bad it's been for quite some time. And you can see what's really happened because we've gone in the last 9 months, we've gone from 149 down to 128. That's a $20,000 move, and all we've been able to do is rally back just 5 points of that. So that's it. Yes, someone asked me a question about Tesla. Tesla had made all the profit objectives that we were looking for. That was down at the 136 level. We had seen the top coming in Tesla around that 194 level, and then it's had a little bit of bad news. Well, had a lot of bad news with the fact that the cars have caught on fire and stuff like that. And I heard on TV today with Jim Cramer saying that these fires were under suspicious circumstances. Well, that might be, but they were still fires. And if you owned a Tesla and it's on fire, it's no longer suspicious. But we'll see. Anyway, I've only seen one Tesla. We have one here in Tucson. It looks like a Jaguar, and it's very, very lovely car. Doesn't have hardly any emblems on it at all. You have to look really closely to see that it's a Tesla. It doesn't have a Jaguar on the hood or anything like that, or a picture of Nicholas Tesla anywhere around it. It's just basically in the same color of the car, in the paint on the back bumper, it says Tesla. And it is really amazing. Yeah, and you can't even, not only that, but you can't even drag race with it because you can't hear it. There are no tailpipes with the car at all. So it's definitely a tremendous innovation in the car world. So that's a good thing, I think, without any stretch of the imagination. Okay, I want to switch back over to Forex here for a little bit because we're having a very strong ABCD correction coming into the euro right now, up around the 134.90 level. Remember, the euro has come down from the high that we were looking at just a few weeks ago when we were making the big ABCD pattern and completing the 61% retracement on the long-term daily at the 138 level, and the market, broke very, very badly from that area. We broke over 400 pips in a matter of 3 or 4 days, and now what we're doing is we're rallying back a little bit with our first ABCD correction, which should get us to the point where we're looking at something to, I would look to be adding shorts around the 130, 135 level in the euro if it's offered. It's trading about 40 pips under that level right now because this stock does look bearish. It's had a pretty significant correction here, and we are having a little bit of an oversold phenomenon. It's being corrected little by little, but this is the key of the currency markets. This is the second most actively traded currency in the world after the dollar. The dollar is first, the euro is second, the yen is third, the pound is fourth, and then you have the Aussie, Canadian, Swiss, and some of the others. And they have interesting patterns also. So something very big is getting ready to happen in these currencies all across the board because they're all having pattern completions, of the same type of degree that we're seeing across the market in just about everything that we're looking at. That's the main thing that we're keeping an eye on here. I wanted to bring up the VIX index because we are making new lows in the VIX index, which was not much expected because it didn't look like it wanted to go higher. So things that don't want to go higher usually go lower, and we're almost going to be making a butterfly pattern here down about a point from where we are right now. So we might be a couple days away from a top in the stock market. That day we're looking at is either the 15th or the 23rd, and we'll see if that's going to going to be the case or not. Okay, we have one question about the VIX, and that is it tradable? Yes, it is tradable. They have the VIX index itself. There's an ETF for it, and then there's the VIX futures. The VIX futures trade very quietly. They don't move very much. But they are tradable, and you can just check with your firm that you trade with, and you can get permission to trade it, and it's not much of a problem at all. So that's the main thing that you want to keep in mind. It's very, very volatile. As you can see, when the VIX finally does turn, hell hath no fury, because this thing really moves, and the profit objective that we're looking at it. Around 12 here, the one I'm looking at sometime in December is 36. I'm looking for it to go from somewhere around 12 to 36 if the fear mode kicks in like I think it will, but the market keeps wanting to go higher. It hasn't got my memo yet. I don't know why. I keep sending memos over there, and they just don't reply to me anymore. I just don't understand it. Oh, someone said maybe I'm wrong. You know what, folks? There's a high degree of probability that I could be wrong. That's for sure. Anyway, I wanted to put the longer-term VIX out that goes back a year and a half, and then I wanted to do one other thing to show you what it looks like on a really, really long-term weekly basis because we've had we got to take a little break. When we come back, we'll finish up at 927-648. How's this about to change now?
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, is my lucky day. We have someone calling in from Colorado. She's not able to connect, but Elaine asked a question about a stock called CXRL. I don't know what the stock is, but I'm going to try to get the data for it, and that's going to be a really interesting phenomenon if I can. CRXL. So the Italian made a slight mistake here, which happens more often than not. So give me a second, and we will call it a CRXL. We'll do it right this time, and we'll add it, and then we will open it. And sure enough, I think the data is going to be coming here, and we'll take a look at it. CRXL doesn't come up with me. I don't know. It might be a penny stock or something, Elaine, but for some reason my data provider, if it's not a listed stock, I won't get it. So maybe it's on the, well, it couldn't be on the pink sheets. It doesn't have enough letters. So I don't get the data. Unfortunately, I'm not able to do that, but I will say that you live in Colorado Springs is one of the most beautiful places in the whole world. Okay, I'm going to try one other, PRXL. This is going to be fun because we PRXL, and then we will add this, and then we'll see. Guess what? We have PRXL coming in. And it's been coming down. Oh boy, this stock is in big trouble. It had just a tiny bit of a gap, folks. This is something you want to be really afraid of here. You know, I guess it was an earnings type gap, but we'll put it in here. You can see that it went from 55 to 47 and it's still been coming down. We've had a little 3-day rally here. We made a 3 drive to a top pattern and a butterfly pattern up at the top when it was made up there. That's one of the reasons why, you know, when you come into these earnings on some of these stocks, it gets a little scary. It's at pretty good support here at 41. You certainly don't want it to go below 41. It sure was telling you that it was trying to make a top up there around that 54 level. It had all kinds of ABCD patterns and butterfly patterns forming, but you know, unless you're a technician looking for those, you know, those are not even going to be in the ballpark of even looking for them. And that's part of the problem that we have going on in the stock market now, is that the Dow and these other indices appear to be making new highs, which they are, but the overall market is certainly not even close to that. You know, it's just the bulls running through the streets is what it is, and I don't know how much longer they're going to run. Maybe they'll run forever, and this will be one of the times where I have to say technical analysis didn't work, and I'll go back to using the 400-day, 200-day crossover moving average, which was always one of my favorite, because you didn't have to trade very much using that. It wasn't right very often, but you didn't have to trade very much. So that's basically what we're looking at. We have a commodity report tomorrow, and I'm going to really focus on the industrial commodities and the grains, because of the places where we are incredibly important technically. We now have the Dow Jones is now up on the day. The S&P is continuing higher. It's up about 4.5. The NASDAQ is up about 16. Gold is down on the day now after being up a little bit. Copper is still in the sewer, and Treasury bonds have been able to rally about 0.5 point. The dollar is just a little bit weaker because of the strength that we're having in the euro on this counter-trend rally. So live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.